I'm James Swinney, and here is your morning market brief. We first begin overseas with the major Asian Pacific markets continuing to get slammed overnight. We have Japan's Nikkei 225 index falling roughly 1.7%. Hong Kong's Hang Seng index that fell overnight 2.9%, and the Shanghai Composite that fell 2.8%. The major European markets are also in the red across the board, with France and Germany leading the way, falling 2.5% each. And in the United States, U.S. stock futures again pointing towards a positive open after both the Dow Jones down triple digits, a total of 203.29 points. Now we first begin over in the commodities markets. This as gold is continuing to tank as the metal is down more than 5% today. It has been falling since Federal Reserve Chairman Ben Bernanke's press conference yesterday, in which he suggested that quantitative easing could be completed or completely finished by mid-2014. Meanwhile, in China, HSBC's flash PMI survey revealed a contraction in Chinese manufacturing continuing to accelerate for the month of June. The headline index fell to 48.3, a 9-month low from 49.2 in May. And over in the Eurozone, markets flash Eurozone PMI survey indicated that business conditions continued to deteriorate in June, but at its slowest pace in contraction in 15 months. The headline index managed to rise to 48.9 from 47.7 in May. Meanwhile, in Germany, manufacturing PMI that fell to 48.7 from last month's reading of 49.4. And in Britain, the UK, retail sales jumping 2.1% in May. This after falling 1.2% in April. Year-over-year, retail sales in the nation were up 2.1% for the month of May, a big increase from April's 0.6% annual rate. And in the United States, initial jobless claims figures rose to 354,000 during the week ended June 15th from 336,000 just 1 week earlier. And continuing claims, they edged down to 2.95 million during the week ended June 8th. Meanwhile, keeping in the United States, we had the release of Markets Flash U.S. PMI survey, and that revealed that the pace of expansion in American manufacturing unexpectedly slowed in June. The headline index fell to 52.2 from May's 52.3 reading. And existing home sales figures rose 4.2% in May to a seasonally adjusted annual rate of 5.18 million, therefore marking its highest rate since November 2009. And manufacturing activity in the Philadelphia region that jumped in June to its highest level since April 2011. This as it rose 12.5 in June, this from a negative 5.2 in May.